what 10 cryptos would you buy and what percentage? Like 50% of it, I'd buy this, that, the other.
I've done day trading. I'm a huge believer in XRP. I think XRP and XLM are going to be the two top cryptos out there. I do believe like you're going to have HBAR and XCN that are going to rock it as well. I think those are going to be amazing. I think you're going to see XRP in the next couple months still hit $10, maybe 12 to 15. And I think in the next 5 years, it's going to be over $100, maybe even $1,000.
Have you done the 4x4x48 though? So that's when you run 4 miles or just move 4 miles every 4 hours for 48 hours. Building massive businesses, obviously this country, largest transfers of wealth. Baby boomers just coming of age. You can buy a business and you have
All right. So good morning or good evening, good afternoon, everyone. My name is Kylie Brown. Welcome to the KB podcast. We have a great topic that we're going to be discussing today. Very much up my wheelhouse. We do have all of our guys with us today. We're going to be discussing Trump's Genius Act and how that ties to crypto and possibly gold and how that's going to be correlated back to the U.S. debt. So we have Daniel on with us, Kevin and Gio. I'll let you guys take it off from here.
Yeah. Good morning, guys. Also, this episode is officially sponsored by Zyn and Celsius, the official stimulants of people who feel like they can solve national debt problem in one podcast. This is not a topic I'm like super seasoned on. Obviously, like I've been investing in crypto for years now. I've panic sold, I've panic bought, I've chased the train. Like I've been lucky, but I've never actually thought about it helping solve the nation's debt. And I guess that's kind of really what we're talking about today.
Do you understand what they're trying to do there with that Genius Act, though, of wrapping up proposed $32 trillion of debt being backed by different cryptos and the gold market, which I don't ever believe the debt will go back to a gold standard or, our money will be based off the gold standard. But tying it to crypto, I like the idea, honestly.
And so like the way that I understand it is turning our debt into stable coins, like issuing a U.S. official stable coin. Is that kind of the deal here?
Well, and I'll let some other people jump in as well. But from what I understand, it's going to be tied back to the certain cryptos. You're going to have like the major ones, Bitcoin and Ethereum, which Bitcoin's kind of more of the gold standard. Ethereum is more of a blockchain kind of setup, but there's also going to be other cryptos that are involved with that, which XRP, I'm all for. I think that one's going to go to the moon. Doge, I don't understand why Doge is on there. That's more of a meme coin, but they're trying to tie it to a few different cryptos that they put in place that will kind of put all of the national debt on blockchain at that point. So what that means is, and do you guys understand what blockchain is? I'm sure if you guys do for sure.
Yeah. What they're actually doing, Kylie, that I watched something on it last night actually, and there's three stable coins, or two, let's just say two stable coins is what they're going to use. And they're going to move the currency into a stable coin one for one. Then to issue that stable coin, you have to buy treasuries with it. So therefore, then they can sell the treasuries and meet the demand of the treasuries and minimize the debt that way. So I don't think it's going to be tied to your mainstream cryptos, from what I understand, just the stable coin they're going to use to peg the dollar and then force the purchase of the treasuries that way. So what that means, I don't know, but that's how I understood it. And if anybody else got something different from that.
What does that mean to just ordinary person who doesn't know anything about crypto or debt? What in the world does the regular American do with this information? Like, do we do anything? Should we be doing something? Like I usually keep my eyes off the TV, but more recently it's just like, maybe I should figure out what the next move is, because I'm just a regular guy, We
drive down the annual budget, right? So if we have 37 trillion in debt and we can slowly drive it down, interest rates are going to come down on the 10-year treasury yield, which is tied to 15-year and 30-year mortgages. So interest rates are going to come down for consumers. So when you buy a car, you're going to have a lower interest rate. You go get a personal line of credit or personal loan from the bank, you're going to have a lower interest rate. If you want to buy a house, you want to get a home equity line of credit, same situation. So it's going to drive up. Obviously, it's going to stimulate economic growth, right? And can create a lot more jobs, and just overall it's going to improve the quality of life for regular Americans. So
yeah, you guys got to remember we have $11 trillion in treasury notes that need to be refinanced in the next 12 months. It's going to be a tremendous amount of interest that the U.S. has to pay. That's not even counting in the fact that all the additional money that they're going to be printing, which I would assume over the next 12 months will be an additional $2 trillion. So the U.S. debt is going out of control. So if you put it on the blockchain and you issue bonds that are associated with that are connected to the blockchain, it's all trackable. So that's why I don't think they'll ever go back to the gold standard, because then they won't be able to print money just out of the middle of nowhere.
They don't want to be held accountable, Kylie, do they? No way. That would be stupid to go back to.
Well, and you guys understand back in, what was it, 1981, when they took us off the gold standard? I think it was Ronald Reagan.
Yeah.
Yeah, it took us off the gold standard, but there's a purpose for that. So when you remove the dollar from a gold-backed standard, you could print as much as you want and cause inflation. So your $10 that could have bought you, a few candy bars at the store, or 5 gallons of gas, no longer relates to that. So $10 now only buys you, give or take 3 gallons of gas, and that's over the last just few years because of inflation. When it's backed by gold, you have to have it connected. Each dollar is worth a certain amount of gold, where it's no longer pegged to the gold standard. So when they're bringing it over to the blockchain, and I'm not trying to make this confusing, Kevin, you can jump in on this because you were just talking about it. But when they move it over to the blockchain, they're going to issue treasury notes that are going to be financed through the blockchain. So everything's going to be trackable, though. And this is going to go into a whole digital cryptocurrency where everything's trackable. It doesn't matter what you do. And I'm not trying to really bring up the beast system too much, but it is going to be a system where they can control you more, because XRP is centralized. Bitcoin is decentralized, but XRP is centralized. And I think right now, the vast majority of banks right now are moving over to XRP as we speak.
What does that mean, though? Decentralized versus centralized, for people that don't know what that means?
Decentralized, governments don't control it. And not saying that they don't manipulate it, because there's ways to manipulate things always. Look at the crypto market of what just happened this last week. I don't know if that was Binance that did that, but there was $8 billion was it $8 billion? I
think it was 19 billion or something like that in an hour, wasn't it?
Yeah, it was tremendous.
It was crazy.
Completely sold off.
It vanished out of the middle of nowhere. But and that was all shorts that were put in by people that were on the Binance chain. So
are you saying that Bitcoin, do you feel like the price of Bitcoin is being manipulated and will continue to be manipulated?
Not Bitcoin to say. I think Bitcoin is a little bit more decentralized, but they're going to end up moving over to, platforms like XRP. It is more centralized. The reason why it's going to be the main token that they're going to utilize is because it is centralized. It will be governed. There will have securities in place. There will be ways that they can monitor everything, and it will allow banks to make sure that they know exactly what's going on at all times. Where Bitcoin, there's a lot of ways to get around that.
And Kylie, I heard the XRP that's going to replace the SWIFT payment. Yep. Right? So make it super fast for banks to basically move money, where today they get to use other people's money, keep hold of it, make money from it, and kind of those delays are good for the banks, right? This speeds things up. Is that kind of the utility of it?
Well, SWIFT takes, anywhere between 2 to 7 days on average. 24 hours, I think, is the quickest. But XRP is within usually 3 to 5 seconds and cost pennies. So, for example, if you're going to move $1 billion from the United States over to Europe, they have to have $1 billion in the United States, they have $1 billion over in Europe.
I just struggle to see that the bankers, and let's call them the banking cartel, if you will, we're going to let something like this happen. How does that benefit the banks? I know it benefits the customer, but the banks making so much money on these overnight rates and trading and all this stuff. Like, why would the banks push for this?
There's going to be a lot more money to be made. If they control the system, it's no different than what SWIFT is. They'll be controlling the XRP at that point as well. So they control the SWIFT system currently, and you get into that and all the fees that are associated with that. But if they control XRP, which that's still going to be owned by Ripple, that's the company that owns XRP. Mm-hmm. Once they control that, they'll be able to assimilate a ton of fees associated with each transaction. Now, it won't be the $25 wire fee that is currently in place. It will be much lower. Might only be a $2 wire fee, but they'll be able to do tremendously more transactions, and everything that is associated with that life as you know it will be on the blockchain. So it's not just dollars at that point. It's not just SWIFT. You're going to have real estate, all on the blockchain. You're going to have the treasuries, all of the stock exchange. Everything's going to move over to the XRP platform. So it's going to become tremendous, and there's going to be fees associated with every single transaction that happens on every single thing. Doesn't matter if it's gas that you're purchasing, groceries, or a stock trade.
Right.
And I also have digitalized some of my real estate recently. It's an interesting process. I'll put it down. We chat about that in a minute, but I'll let you jump back in on what we're talking about.
Here's what I would say, the way I see this whole thing. Obviously I've been in the gold business, right? So there's, lots of conversations around restructure, resets, and the word conspiracy gets thrown around. And how I see it, this whole idea of a currency reset is certainly not a far-fetched conspiracy. Every major economic power, eventually they hit a wall, right? Their system just can't carry the weight of its own debt. And history proves this to us. You got Weimar, is the hyperinflation story of Germany. Everyone has heard about that. Argentina, Venezuela, Russia in the late 90s. Obviously, what happened in Europe with the sovereign debt in 2010. Now, if you look at the US, we're at what, 37 trillion, whatever the debt is. Our interest payments on that debt alone, that is as big as most other countries' defense budget. I mean, that's crazy numbers. So something has to give. And historically, you've got really, for governments, there's three ways out. They raise taxes. We've been seeing all these different things happen. They inflate the currency. And by the way, I think this is a bit more of a devaluation play on the currency, right? A shift. This is a wealth confiscation tool, in my opinion. So if you want to call it conspiracy, go ahead. But they obviously raise taxes, inflate the currency, and then they revalue the money itself. And maybe this is what we're seeing, right? Because we've got different technology in play. Before they had to use gold as the tool to do it. Now we're on the blockchain, and we've got these digital infrastructure, which is being built and sold to us as an innovation. You've got these, the CBDCs, the central banks tokens, the stable coins, and it basically gives the system and the power, the men behind the curtain, should we say, in my opinion, a brand new way to control it and hit that reset button. And I don't think, by the way, it's going to be an overnight thing. We're not going to turn the TV on and some big dramatic event's going to happen. I think that's where a lot of people, the public, think that's what they're looking for. I don't think that's the case. And, these things are gradual. It's sold to us, as I said before, as innovation, some modernization of our system, and it's sold to us as stability, like 2008, right? All of these things that happened where they saved these big banks, these are private companies, and they went in and stepped in and saved them, right? So, and they sell it to us as a good thing. But either way, make no mistake, the end result's the same. It's going to be, in my opinion, a really quiet, manipulated way to write off a portion of the debt. So the question that I ask myself, if it happens, who benefits from it? Right? And what is going to be the ripple effect to the everyday people, to us? So if you're not ready, just so you know, every monetary system reset in history has had two outcomes. People either get wiped out by it, or the people that saw it coming can get ahead. And this is my question for you, Carl, as it relates to real estate, crypto. They either get positioned early or they get wiped out. So what can somebody do, in your opinion, to position themselves so they don't get wiped out by an eventual reset, restructuring of the financial system?
Oh, great question. So first off, when do you think this transition is going to happen?
I think it's in motion, is what I'm saying. The fact we're talking about it is
slow, gradual process, right?
Yeah.
So everything's always priced into the market before it happens, right? You got a Fed rate cut coming in a couple of weeks. It's already priced into the market. It doesn't just happen overnight. Then the market's like, oh my God, I didn't know that was going to lower interest rates. So the market's going to be up 1,000 points. So everything's already priced in. So
and precisely. So, there's a reason why you tap your cards. There's a reason why you scan your hand, which I don't do any of that stuff. The tap card's fine, but scan my hand, I don't do any of that. They've already got these systems in place. And if you guys go look, the XRP and some of the digitalization through the banks have been in place since 2019. Bank of America has been using that system for a long time. Japan, every bank in Japan is moved over to that system as of this year. Now, how do you get ahead of that system? Is you start doing what all the big guys are doing right now. What is Larry Fink doing? What is BlackRock doing? What is JP Morgan and Jamie Dimon doing? Even though they hated on crypto for how many years now, while they were hating on it, what were they doing? They were having all of their main people buy those cryptos. They were buying those cryptos. And if you're in the right cryptos, it's going to protect you, because you're going to look at those main cryptos that are going to back the U.S. government and where our debt's going to move to. And, the BRICS nations, they know this. Why do you think they're pushing against what we're doing? They know what we're trying to do. We're trying to push all of our debt off and just do a quick, sleight of hand. But if you position yourself correctly with crypto, and I've talked to you guys about this a little bit off mic, especially Daniel, but there's going to be a great wealth transfer that's happening over the next few months to a couple years. It's going to be the biggest wealth transfer of all time. And this will not happen again in our lifetimes. Probably our kids' lifetimes either, or our grandkids. It's once in a 100, 200, maybe 300 year opportunity that's coming right now that is going to make people beyond wealthy, or like you said, they're going to go through the floor and they're becoming the poor class.
Yeah, I think it's holding paper, right? If all you're holding is paper, then which is a promise, right? We all know that. That's not real assets. You've got to have a portion in real assets, land, gold, crypto. I suppose the word crypto, for me, this is my opinion, gets banded around. There's so many different things to choose. You've got your mainstream coins. Here's a question for you guys. There's mainstream, and then there's the native markets. Do you know anything about the differences between that? And where does somebody start, I suppose, in crypto?
Well, I think most people should start with the basics. I think they should go into Bitcoin, maybe Ethereum and XRP, XLM, some of the basics. You got your main tokens, and then you have your altcoins. And then there are some other crypto assets that they label them slightly different that are, beyond altcoins. They're high risk, but there's a lot of money to be made on those if you understand, who the developers are, what their protocol is, what they do. do and how they're going to change the financial system as we see it. So there's a lot of money being made. I'm not saying to invest in those high risk ones. And I'm not telling you to put all your money into any one of those. I don't have a lot of money in Ethereum or Bitcoin, but that's where I started. And I bought XRP back when it was 17 cents.
What's it at now?
You know, it went up to like 360, 370. I think right now is a great time to buy, but the people that got wiped out, you know, they leveraged themselves. And I didn't really hear the story, but I guess a lot of them, you know, suicided themselves. That's absolutely crazy. But it's right now is a great time to buy. You're in before most of the big national banks are in. They're just getting in right now. Why do you think Trump is spending billions of dollars and pushing crypto so hard? He knows where it's headed. Eric and both of his sons, Don Jr., they know where crypto's headed. They know it's going to take their whatever they invest into it, $2 billion, and turn that into 20 billion, 50 billion, 100 billion because of where crypto's headed. And if you're going to have almost all assets in every transaction, is any transaction in the world for everything to be on the blockchain, and they're going to earn fees from every transaction, that's going to be huge. It doesn't matter if it's pennies, it's going to be huge.
And that's the utility of XRP, you're saying?
Yeah, XRP. Yeah, well, and you got different ones. So I'm just referring back to XRP.
I was buying it at 33 cents, I remember, and I did really well in it. But then there was that whole issue with they had the legal issue, and then Coinbase. I've still got some stuck in Coinbase somewhere. I'm trying to figure out where can you buy it now.
Buy it on Coinbase right now, but the SEC, SEC is the one that blocked all that for years, a few years there. I think what was that 2021 around that?
Yeah, that's about right. Yeah.
Yeah, and back then it was only, I don't remember the exact numbers, but let's say 60 cents or whatever, and then it dropped back down to like 18 cents. So you could buy it relatively cheap back then, and everybody got scared. But that was the token that they were focused on. Why were they so focused on the SEC? So focused on XRP? Why not go after all the other ones?
Because they saw, I guess they see it as a threat. They know. From what it sounds like a lot of these big institutions and, you know, even these big wigs that were just, you know, talking down on the whole idea of blockchain, they're either afraid of people losing faith in like the current banking system, or they themselves are secretly losing faith, but they're saving face by just standing on their hill while they secretly have their teams like looking on all this stuff.
Well,
right?
you gotta kind of think of it as like you're the king of the castle. You don't want anybody to overtake your position as the king. So you're trying everything you can to protect that until you have something in place. So if you see a new system coming, you want to make sure you put yourself up on top of that hill. So you're the king of that next castle. So they had to, you know, delay the inevitable because, you know, I'm not going to sit here and pitch the Bible and everything, but you guys know what happens throughout the Bible. You know, that system has to come in place. That's just mandatory. It's a matter of time. And while I do believe we're in times, that doesn't mean the end of the world. It just means there's a huge change coming.
Yeah. Where do you guys, well, Kylie, I know, I mean, you're of all the people I know in my social circle, like you are the most seasoned on crypto and blockchain. Like from what you're saying, it sounds like, you know, the regular person should stick to the basics with a little bit of the speculative stuff. But where do you hold that? Like, I know, you know, we were talking about where can you buy XRP? I know you can buy XRP on Robinhood right now. I'm pretty sure. I mean, that's kind of where I had all of these different wallets and it just got to be confusing. Like, where would you recommend people hold this? Like, should we hold it on a hardware wallet or some sort of exchange? Like, what are your thoughts on that?
Yeah, I don't, especially if you have any amount of crypto, I definitely don't recommend you holding on an exchange. I was on the Celsius exchange and BlockFi, both of them. Celsius especially, I'm still trying to get all of my funds out of that. That was maybe not 5 years ago, 3 to 5 years ago. They went bankrupt and I had a little over $100,000 in funds. Luckily, it wasn't that much for me, but you know, still quite a little chunk of money. But I will never hold it on an exchange because they can seize it at any time. Even if they don't file bankruptcy, they can seize your money. It's just like a bank, which I do believe there's going to be a run on the banks coming up, and that's a whole other conversation that we have, you know, in one of our future podcasts. But no, you always want it on a soft wallet or a cold wallet where, you know, it's a hard wallet. I'm not going to just recommend anyone's, but I do use.
Can you explain the difference between that soft and cold for people?
Yeah, so soft wallet is a wallet. You can just go to like Trust Wallet or MetaMask or any of those guys. Those are great wallets. Both of them are great. And you can put your tokens up on there. As long as you don't give out your tokens or your crypto keys to anybody, which is usually a 12 or 24 word seed phrase, you're safe. There's ways to even hide that though. Like if someone got into your wallet, let's say they figured it out or seen your code, you know, your passphrase for some reason, there's ways ways to hide it in there and allow them not to be able to get it out as well. So there's ways to protect it in many ways. And you could also vault it. That's all soft wallet stuff. Off storage, where you're basically putting it on a device. Let me see if I can pull this thing out there. I mean, plan on bringing this thing out. I use Trezor, and then I have a couple other ones I use, but it's just a little device like this. So usually it comes up with a pin or something that you need to put on it. And it's on, like my other one, it's a 4-digit pin. I created it into, I think, a 6-digit one to make it a little bit longer, but you move your crypto over to that and you just attach it to, usually like I either keep it on one of my other devices. I don't keep it on my phone because you never know if you lose your phone or whatever, but let's say you keep it on one of your computers, you could connect it to your computer and then it attaches to your little Trezor device and you could access your wallet from there. So like if I go into, didn't plan on pulling this up, but I go into Ledger, so I got a little app, it's called Ledger. So I can see that. I don't have access to it on my phone, but I can go in there and actually XLM is going up right now. It's at 31 cents. But anyway, you go into Ledger and then you can see kind of what's going on with some of your cryptos if you have access to that on your phone. But it doesn't allow you to pull it out unless you have this little device, which this is not the Ledger, this is the Trezor. You'd have to have your Ledger device to be able to actually move that crypto out.
Right. So if you lose that thing there in your hand, you've lost all your crypto.
No. So there are ways to, you can purchase that. There are ways to secure that as well. So, I do keep my passphrases in 2 different locations just in case you lose, or your house catches on fire or wherever. But you want to make sure that's secured information. I do believe that they're going to come up with more secured ways to, secure your crypto, because people that are holding, over $1 million, they don't want to take a chance of losing that type of money. I've been there. I've lost $100,000 where, hate to say it, I was a bonehead and someone got access to my C phrase. So I've been there, been through the issues.
And just kind of linking this back to real asset behavior. I know we were talking about, like we've mentioned gold a couple of times so far. I mean, in addition to crypto, like when this trust in the current infrastructure and fiat really is wobbling, what sort of tangible assets? I mean, are there any tangible assets that people can get their hands on to prepare for this big reset that's coming, like outside of the basics that we talked about, like crypto, XRP, like land, housing, or hard assets, things like that?
No, I always believe, real estate is a great asset. Obviously there's ups and downs, and depending on where you buy at, that can make a huge difference. But even the industry Geo is in, gold and silver, I think you're going to see probably a $5,000 gold price. That might not happen. It might drop tremendously first, but it might run to 5,000 and then drop. There's going to be a time next year where it's going to drop big time. But also, I do believe there's going to be a time in the next couple of years where, what's silver at right now? 40,
50.
50? Okay. Yeah. I do believe silver is going to overtake gold in its pricing, but that's because of its rarity and what it can be used for. I really do believe that will happen in the next couple of years. So.
Yeah, that's a bold claim. I mean, look, I don't think gold gold will be 5,000. It will be 10,000 because the dollar's going down. There's no way. So it's 1 ounce of gold never changes, right? It's the purchasing power of it when converted to whatever the currency is. What can you buy, goods and services in real terms? So I think price can mislead people. Price only matters in the short term if you're trading it and you're trading that difference in the arbitrage and the volatility. But over the long term, people said, I remember selling gold at $100 an ounce, 200 for whatever. It will never hit 500. It will never hit 1,000. It will never hit 1,500. Well, look, and not so long ago it was 3,000 or just under 3,000, and people, it will never hit 3,000. Now it's at 4,000. So it's crazy to think where it can go. And I think there was actually something on one of these videos I was watching yesterday about specific topics about how they would revalue gold to 15,000 overnight if they used this reset and they included gold in the reset with these stablecoins. So price is all relative, isn't it? It's what can you do when you convert it back to the real currency, which is the mode of exchange. But
that's funny. I was going to ask you what you think value of gold really is worth an ounce, and that's probably spot on because it's devalued as well right now. So
exactly.
How long have you been in the gold and silver industry?
Well, I did a good, I would say, probably last 15 years of in and out of commodities. From rare earths to precious metals, and then over here in the States, 5 years working with some of the biggest retail gold sellers nationally in the US. So, and again, it's physical assets we dealt with, no paper gold, and that's what people are looking for outside of something that is centralized, right? Something outside of the banking system. It's like a lifeboat, really. I think the good way to look at when you're buying gold, you think the system is like the Titanic and you're sinking slowly, if that's, one way to look at it. Gold is that lifeboat, you just jump on it and get to shore and just stand there and watch what happens around you, right? That's really what it is. It's insurance on your money. It's a good way to look at it, right? That's really what you're doing. You're not trying to speculate which way it's going. You're just saying, look, I've had enough in the currency. I'm sinking. It's going one way over time. Let me get out. Because like I say, 1 ounce of physical gold is 1 ounce of physical gold. It's never changed and it never will change. So I'll tell you a story here. This is something I did with my kids, right? I tell people this story a lot when they ask about gold and silver. And we did it with silver because my kids couldn't afford to buy too much gold. But every month, part of their allowance, they have to buy some precious metals, right? So when we first started doing it, silver was at $13, $14 an ounce. So we bought a bunch of silver coins, 1 ounce silver coins and silver bars at $14. And now it's 50. I did this with them when it was about 30. Okay. So I pulled them aside again. I said, right, guys, remember we paid $14 US for this 1 ounce coin. Put the $14 down on the table. I'm like, yep, I remember. Okay. Now think about, you can go to 7-Eleven now. Think about how much candy and chips and junk, whatever you can buy with the $14. I visualize it. Yeah, I can get this, I can get that. Okay, makes sense. But now imagine you just left that $14 in your safe, and we fast forward to today. You give you your $14, you go in, and you're probably going to get less candy. But let's say you get the same. Fine. Well, now you can take that silver coin, go and sell it anywhere, any gold shop or dealer. You're going to get $30. This was in the space of 3 years, right? Not even. So now go to the 7-Eleven. What can you get? And their eyes were like, just, oh my God, like, so that's what gold and silver can do. You've not invested it, you've not speculated it. You've just stepped out of the currency for a period, and you're stepping back in on your term. But that doesn't happen, in 2 months, 3 months. That could go the other way against you, right? So you've got to hold it for the long term. That's why it's a long-term play. But now, again, it's 50. So it's just proving my point even more. And this was, like I say, 2021, I started doing that with the kids. So hopefully that lesson will set. And again, I'm yet to teach them anything about bloody crypto because I'm like the kid in that scenario. And I do have a little bit, and I did make some money on XRP in terms of potential like upside.
Yeah.
But I got out. I got nervous with all that SEC thing, and I thought, this is just too complicated for me. I'm out, and I shouldn't have been. So
I need to get my kids into a little bit more gold and silver. I'll be honest with you. I got them 100% into crypto. It's what I know, and it's what I know well. And, I do like gold and silver. It's God's money, so I'm all for that. But I also believe there's time frames to be in certain things. So while I think we're still in a great time frame to be in crypto, I think that silver market, there's going to be a great time right around the time Bitcoin in the next few months hits between $150,000 to $250,000, which is going to happen. Just like, gold, it's going to hit a certain price. That's going to be a wonderful time to jump into the silver market. So with what you're referring to, though, I have my own beliefs on this, but you guys believe we're moving over into like a hybrid economy where it's, half blockchain, half fiat? Or do you think we're going to stick with 100% fiat, move 100% crypto? Which way do you guys think we're headed?
If I had a gun to my head, I would go for the hybrid because, again, it's that slow transition to a full transition, right? So I think that's a logical next step to soften the blow. But all of a sudden, we wake up 3 years down the road and we're all fully digital, where we've been fully digital for a long time. If you think about it, with credit cards and all these other things, cash has become non-existent. If there's a run on the bank, like you say, Kylie, 9 out of 10 people do not get their money today physically. If we all went to the bank today,
and just before you finish that, that was it 23? We already had the biggest run on the bank in the last like 50 or 100 years. It was worse than 2008.
Yeah.
Oh,
I don't know. Most people probably don't know that, but it was actually worse than 2008, and it's going to get much worse this next year.
Yeah, it doesn't surprise me. But again, people, physical cash in banks, they don't have to hold a physical cash.
Right.
Fractional banking says I think they need 10% deposits. So for every person that shows up, somebody's going to go home empty-handed because the banks don't have your money. I mean, go try and get $5,000 out of the bank today, and they want your blood type. They don't like to give it back. So.
Yeah, going back to that question you had about like the hybrid, I think it's secretly already happening, and I am seeing some weird signals that I don't know how to feel about. Like, Trump and his sons have been pushing gold from what I've seen, like quite heavily. So it's just like, I wonder, it's like, okay, are they coaching the regular American to like shift their money into hard assets because they're shaky on fiat? Or is it because, there's something planned where the US is going to, with their accounting kung fu, like reevaluate the price of gold? Like I know nations have done that in the past. And gold's, gold, I don't think it's just gonna it can't crash. It's a finite resource, right? Like it's the oldest currency known to man. It just feels weird that it's being pushed all of a sudden now.
Yeah. Well, the last time they reevaluated it, I don't remember what year that was, but I think it was right after they mandated that you own it in gold was illegal.
Yeah, 1970 Nixon went from $20. They confiscated it and then revalued it at 35 overnight. So you go figure that's basically what they're proposing with this new reset, right? So it's just a different asset behind it, and this time they're going digital. Then it was gold. That was, the asset of choice then.
Yeah, again, and we'll let Kevin jump in here, but I just don't believe it's going to be based too much off of gold or silver. And while that still has a place, like I said, that's God's money. I think that's great assets to have. I believe it's going to move over 100% digital, and you're going to see that in the next 2 to 3 years.
Yeah, I think it's going to be hybrid. It's going to be a slow, gradual process. Everything's a slow, gradual process. So that's my opinion. And I mean, slow, gradual process. I mean, if it's going to be hybrid, probably in about 5 years from now. So,
here's the scary thing. If you think about all the crashes that we see, like market crashes, it's always the assets that crash, which are backed by the dollar. All assets are backed by the currency, right?
Right.
And it's the volatility within, say, housing in '08, stock market. These are the assets on top of the dollar. The biggest problem with this that's different is it's actually our dollar that is the thing that's on shaky ice, right? So that's where it gets really scary, because if the US dollar collapses, and central banks, by the way, guys, all over the world are buying up more physical metals than any time in history.
Yep.
And just in the last 4 years alone, it's crazy. Every quarter, it's getting more and more and more. Poland, out of all countries, have been the largest buyer of gold month on month this year. Czech Republic, they're all doing. They're stockpiling physical gold. Central banks don't typically buy silver, by the way. They typically buy physical gold. And so when they're doing that, is they're dumping the dollar, right? So when central banks are doing this, I would be really nervous about the dollar and cash and sitting in cash personally. What do you think about that, Kevin?
So China basically has their currency pegged to the US dollar. So they have to buy treasury bonds basically on a regular basis. And when they buy 10-year treasuries, right, that drives down the 10-year treasury yield. You got bonds, and bond prices and interest rates have an inverse relationship, right? So when there's massive demand, bond prices go up, interest rates go down. So foreign central banks like China and Japan are usually the largest consumer of US treasuries, besides the Federal Reserve, obviously, as well, because the Federal Reserve, anytime we're in a financial crisis, basically, and the Fed brings interest rates down to 0 to 0.25%, they have this thing called quantitative easing, right? We went QE1, started in 2008, went to QE2, QE3. The next would be QE4. And when they have QE, they're basically buying treasuries, they're buying corporate bonds, because when corporations aren't doing pretty well, you get a huge sell-off in the financial markets. If you're buying corporate bonds, it drives down their cost of capital, right? Because it drives down interest rates. Or they're buying mortgage-backed securities. Remember when Fannie Mae and Freddie Mac got nationalized in 2008? So China is a huge problem, because if China slows down buying treasuries and they're starting to basically buy gold, which they're doing, selling off treasuries and buying gold, the 10-year treasury yield's going to go up. And if that 10-year treasury yield, goes up to 5%, 6%, 7%, that's going to put us in a huge recession. We're going to be -5%, -6% GDP. Equity prices will drop 50, 60%. That's kind of the situation. So that's the biggest concern, right? So
do you guys support interest rates lowering, or are you guys opposed to it?
Oh, no, I love interest rates going down, because I like asset prices going up. So because I'm an equity.
What's the adverse effects on that? Like, because if the interest rates go down, what happens to the house prices?
Well, the house prices go up. Interest rates go down, obviously there's a lot more demand, right? So now you have these millennials, or actually millennials are getting older now, right, Daniel? You're like, what, 38? Right. So basically now you have the Gen Zs, I guess, are now looking to buy homes possibly, right? So they're sitting on the sidelines, because right now, if you're going to go get a 30-year mortgage, it's going to cost 7%. So what does that mean? Well, that means if you basically got a mortgage in 2019, the interest rate was 3.75%. That could be the difference between paying $1,500 a month compared to paying $3,000 a month, right? So that's a big deal. So when interest rates drop, if we have a precipitous decline in interest rates, that's going to drive up demand for new home buyers. So
where does this leave stocks? I mean, I feel like stocks are the backbone of most Americans' wealth. I mean, why not just stay the course and invest into like SPY or, the Vanguard, like mutual funds and ETFs that have just, consistently gone 10%, 7 to 10% year over year. Like,
when the Fed's lowering interest rates, right, you always hear don't fight the Fed. So, and during COVID, it was March 2021, right? So the equity markets were in free fall. Gold actually started to recover before the equity markets did, right? Now, gold did drop off the first week as well. Probably had a nice decline. Gio would know, because he was selling gold at that time. But gold actually came back right away. But what happened is when the Fed aggressively started lowering interest rates, people were still spooked. I know guys that were trying to short the S&P 500, buying like the ETFs, SDS, which is 2x short the S&P 500, right? SDAL, 3x short the Dow Jones, SQQQ, 3x short the NASDAQ ETF, right? And I was like, look, guys, you can't fight the Fed. You got to start buying equity prices. And I made a bet with this guy, Dr. Tim. He's a cardiologist. And I said at the end of the year, the Dow's going to be at 27,000. He thought I was insane. Well, again, I've been working in the financial market since 2004. I said, well, okay, you can't fight the Fed. And again, I won that bet at the end of the year. Now, I never collected the money. I never asked him for the $1,000 that he owed me because it was really just a friendly bet. But that just shows you can't fight the Federal Reserve. So no, it's okay to diversify. I mean, gold and silver, if you look at silver was at $15 an ounce in 2021. Now it's at 50. So silver, with the exception of AI stocks like NVIDIA, right? You know, AMD, stocks like that, right? I mean, some of these equity prices have actually skyrocketed since the sell-off in March of this year, but you could always diversify. And not only that, I mean, you should have money invested in the equity markets. You should have money invested in silver. You should obviously own a home to live in. You know, you can make a huge return if you just invest like in land development. If you come in, you can make a way better return in a very fast period of time. You can outperform investing in stocks. If you buy multifamily or if you're buying development and you're putting 20% down and you're using the bank's debt to finance the business, you can make a huge return in a short period of time, right? So possibly double your money in 18 months to 2 years. So again, you should invest in everything.
Going back to, you know, interest rates lowering, and so therefore the demand for housing goes up, and so therefore the price goes up. It seems like historically, like when, you know, the dollar has gotten shaky, people run to dirt anyways. So that I feel like even exacerbates the demand of home or of land and homes even more, especially, you know, I've heard stories of like big conglomerates just buying up entire neighborhoods, inherently increasing the prices of the surrounding homes, making it even harder. So like when I think about, you know, what you were saying, Kevin, about millennials or Gen Z being in the pocket, I feel like most of that generation isn't of the age where they haven't accumulated enough wealth to even touch a house right now. I mean, I feel like my generation has the last viable shot of owning a home with all of these drivers. And I worry about what are my grandkids gonna do? Like if they aren't able to inherit land, right? It's just kind of concerning to me that all
these corporations the 2009 financial crisis, BlackRock came in and pretty much bought a lot of assets, like almost 6,000 homes in Stockton, right? Just to let you know, that's where it all started. And now, like you said, recently we had a conversation, Warren Buffett, he's invested in some of these home builders, right? But it's built like what Kylie said, it's build to rent. They're not like just going in there and speculating. So that whole thing, all these big corporations now are buying a lot of different houses, right? A lot of apartment buildings. And so if that continues, I would say probably in 20 years, I mean, there might not be a lot of landowners left, you know?
Yep.
So we'll see.
Looks like the build to rent is where a lot of those big home builders are going.
Yeah.
But also, guys, I don't know, I've looked back in history, maybe you guys could let me know if I'm wrong, but I've never seen the rates drop too much in a good economy. Like that just doesn't happen. And right now we're at what, 6%, give or take, 4.25%. And usually if rates drop down to, let's say, 0%, usually the market is in a free fall at that point.
Yeah, no, yeah. They only aggressively lower interest rates when they have to. Like in 2008, that happened. In COVID, they did. You know, and then there was a time where the market got addicted to cheap money, right? So they tried. It was in 2000. I think it was like around Christmas 2018. The Fed tried to raise interest rates. They raised interest rates, and then the S&P 500 had a 20% pullback, and the market basically was telling Ben Bernanke, no, don't do it. So he stopped. And so the market was just addicted to cheap money, and they wanted the cheap money to keep stimulating the economy. But then inflation got out of control. During the Biden administration, at one point, the consumer price index was at 8.3%, right? So now again, I mean, can you trust those numbers? I have no idea, right? When you see food prices and gas prices and everything going up so much, do you really think that inflation is only increasing 8% a year? Now they're claiming that inflation is more like a 2.6, 2.7%, excluding food and energy costs.
You know, this is, well, I would say this is a question maybe for anyone, because maybe I'm just a half glass full type of guy. Yes, there's a lot of stuff that could go wrong, and I don't think it's all doom and gloom. And you were saying, Daniel, what are the next generation do? Well, I've got kids, and Kylie's got kids, and you worry, what is it we're leaving them? But if you look back at history, these things have been around, these concerns, these resets. I see it as a huge opportunity as well, right? So let's look at that, because Kylie, you mentioned about the biggest shift in wealth transfer in our lifetime. I believe we are somewhere in that I believe that anyone sat here right now can take advantage of that. It's just figuring out how you do it, what's the best place to do it. And if I had to analyze, I would definitely say, for me, cash scares me. Anything that you don't need to operate, meaning to pay your emergency bill. So let's say 6 months worth of cash, whatever. I don't believe you should be sat in cash. You need to be in hard, whether you choose to stay in the banks, stocks, whatever, but you need to diversify out of that. More hard assets, real assets, the better, in my opinion. But what does somebody do? Let's say you've got a 5-year plan, Kylie, for somebody. You're their advisor. I know obviously none of this is financial advice, but you're just giving them, your buddy some advice. What would you tell somebody to do over the next 5 years to protect themselves and position themselves for profit in the next 5 years?
Well, it really depends on their financial situation. So if I'm speaking to my kids that don't make much money, because a lot of people do live paycheck to paycheck.
Yeah.
I always teach them first off how to live off slightly less. So, they could make sure they still pay their bills, whatever needs to be paid, which, they're still kids. So there's not really much they got to pay for. But take every additional dime and invest it at this point. And I think I had this conversation with Daniel. Being an employee is fine. If you never want to own a business, that's fine. I'm trying to teach my kids to be more entrepreneurial. But if you're an employee making, let's say, $100,000 per year, what can you live off of? Can you live off $50,000? Can you live off $70,000? That remaining $30,000, as long as that's after tax, that you're receiving $100,000, I'd be investing it into, hard assets. I know you're saying cash is not the way to be, but I think in the next few months, you're going to want to have a stack of cash because the market's going to fall and there's going to be great opportunities to put your cash somewhere. I am not a believer in holding too much cash. I don't believe cash is trash like some other people say, but there is going to be a great opportunity coming up where you're going to be able to buy stuff up. I'm not going to call it 08 because it's going to be quite a bit different than 08. We're in a totally different situation than what happened in 08. There's going to be a lot of assets that are going to be able to be picked up for pennies on the dollar. So,
right, but generally they won't be allowed to sit in an asset, move into cash, then purchase. What I'm saying is just not sitting in cash waiting for that to happen. Sit somewhere where you're protected against the cash collapsing, because that's my belief, that the system, and that's what we're saying, monetary system itself is going to shift, and if you're in cash, you're done for.
Well, the system is going to eventually crash. The dollar is not going to stay the king forever. It's going to crash eventually. Now, is that in 2 years? I don't know. 5 years, 10 years? I'm not sure. But they're moving over to a digital currency for a exact purpose. And for my sake, I keep a vast majority of my current assets either in real estate or digital. Not saying, hard assets like gold and silver aren't great. I just think there's going to be a time to buy coming up. Like I told you, right about the time Bitcoin hits that 150 marker, it's going to be a great time to jump into silver and ride that wave up and then pull out of silver. Every market has its time frame of where you're going to really make the most out of it and then move on to another asset. It doesn't mean you pull it all out. So like, even if you only have $100 in there, doesn't mean you pull all $100 out. Pull out 50, put it in another asset, because you got to have yourself diversified. If you're not diversified, you're putting yourself at a huge risk of, not saying losing it all, but where a market could just fall apart.
No, I agree. And the one thing I absolutely believe is, like, people ask this all the time, will the dollar disappear? And the dollar may disappear, but there will always be a government controlled currency. They will not let go of it. They have to control it. So it just may change shape. It's nothing going to disappear, but the government have to control that.
And actually, while you're speaking about that, let's make that very clear. For anybody that thinks your debt's just going to disappear because the dollar falls apart, which I don't believe that's going to happen overnight, that's not going to happen either. That's just a transfer of that debt onto some other type of currency. So whether it's digital or an actual dollar, it will move over to something else. They're not going to just say, hey, your $500,000 house of debt that you have for your mortgage is gone. We're going to dismiss it because the dollar collapsed.
The government are the best at kicking the can down the road, aren't they?
They've done an amazing job at that, to say the least.
Also, like patching the plane while it's flying quietly.
Well, and if you guys speak to like a lot of the younger millennial part of the generation, which I think I'm still in the millennial group as well, Daniel, but a lot of them don't understand money at all. So they think you can just keep printing money forever. And well, why don't the U.S. government just print more money? Well, you have to pay interest on that. There's a time that comes where you can't keep, getting people to buy, and Kevin knows this industry very well, but you can't keep getting people to buy treasuries and bonds and, paying for our U.S. debt, especially at the rate it's at right now, because every 1% that the debt changes, I forgot what it is, but it's like an extra $80 billion that we have to pay. So it's a tremendous amount, just 1%. So that is a great point of why the interest rates need to drop, but I don't think that's going to change much over the next few months. All right, guys. Well, I think we're coming to pretty much an end on this part of it. Does anybody have any other final points they want to throw out?
Well, I would just say one thing. If I really do believe if people ignore the signs of a reset, it's like ignoring a dark cloud before the storm. I think it's get educated, do your own research on it, figure out a way to at least protect yourself outside of the system. That's all I would say. for what it's worth.
What you got, Kevin, Daniel?
I mean, it sounds like you said, I mean, it sounds like the best advice that we could give anybody: live below your means so you can take advantage of the opportunities that are coming. Cause, you know, we've talked about historically, you know, when while most people lose their ass, there are people that have just been waiting quietly and they see these things as opportunities. It's just like, do you want to look at it half glass full or half glass empty? Personally, like, I'm pretty excited. You know, I'm not really stressed out about any of this. Like, it's all very interesting. It's all very exciting. But yeah, man, I'm just, you know, trying to stack cash and try to jump in where I see the opportunities as they come.
Yeah, no, and guys, right now is the time to jump in. Like, I'm not saying go all in, always cost dollar average into stuff, but it's going to be a great ride, and just be ready for what's going to happen in the market. It's going to be, you know, I think it's going to be wild over the next few months. So to say the least.
Cool.
Any final words, Kevin?
Yeah. So lastly, everybody, protect your assets. LLCs, you know, are really good. You know, if you have, I don't know, over $100,000, you know, let's just say you have $500,000, you don't want to keep that in your own social security number. There's a lot of people out there that are always looking for a free handout. You know, keep really no more than $1,000 in your own name. Everything else should be in a LLC or a few different separate LLCs with separate tax ID numbers. That way the LLCs own the assets, you don't own the assets, and you protect yourself from lawsuits and liabilities.
Yeah, guys, and I'm a big follower of Christ, so, you know, on everything I would say pray first. I always put that out there. Pray first. See where that leads you. Whether you're speaking to Yahweh, God Almighty, Yeshua, Jesus, or the Holy Spirit, you know, always pray on everything. And we look forward to seeing you guys soon. Have a blessed weekend.